All right, team. Hey, it is Monday. Wow, July 19th. I am being covered up by my own graphic because this is a high school production at best. But that said, we have very good information on here, which I'm sharing with you, tons of behind the scenes stuff. Reading between the lines is what it's all about today, as I'm going to go ahead and share this from my page to my profile here on Facebook. And of course, we'll be live and premiering on YouTube as well here in just a few minutes. If my phone would stop going off, this would be much easier. All right, so everything's red today. It's an ugly, ugly day, except for bonds. Hey, yay! Ha. Terrific. You mean I wear my green shirt and we got the bump on bonds? What's up, Sarah? Happy Monday to you as well. Team, we have a lot to go through here today. Let's first take a look at some of the stories. We're going to talk about reading between the lines today because we know that the majority of media and information that is shared on what you would call media is mostly propaganda. In other words, paid for information or information that is disseminated with the purpose other than just to inform you of the truth. So if we know that's the case, then sometimes we have to look between the lines, and that's what we're going to do today. So just to give you a preview of where we are looking bond-wise, we're up 23 basis points today. So I got good news for you on interest rate front. We're going to get to that in just a second. I do want to go there. So stocks got hit today pretty hard. 725 points down in the Dow. Still at 34,000 though. So keep that in mind. Still at 34,000 in the Dow Jones. And recently, when this has happened, it has rebounded very quickly. So that's what we're going to be looking for here on the Dow is can it rebound down 2% in one day? Oil has been getting smashed. Finish him like bad. But hey, we're down to $66. We started buying oil and oil stocks at $45. So we're still sitting pretty if you got in the beginning. It's and you saw this here. Here's the reason why. Here's the story, and I'm not going to get into this, but OPEC, which the whole point was to get OPEC to come in and boost production because the oil price was going up so fast. We're going to get to 100 before you know it. They don't want it to be overnight, right? They want it to get there. They know it's headed there. I know it's headed there. I've told you it's headed there. Where's there? $100. I'll start lightening up my load in the 90s. So actually today's a great day to purchase if you're looking into some XOM, CBX, or the USO, whichever one you want to play. Today would be a good day to start a position if you haven't yet, or add 2-1 if you didn't get enough or felt good about it. Gold's still at a little over $1,800. I mean, gold is like corn now. You guys notice this? I cannot imagine owning gold. I just can't. And I know there are people who love it and they're behind it and they dig it and they're all about it. I just don't know. I mean, you look at it 3 months later and it's the same. It's like corn. So boring. And not that investments should be exciting all the time necessarily, but goodness gracious, gold is so sideways. Something that's not sideways, crypto, that's up and down as it can be. Bitcoin at a very important threshold here in 30,000 range. This is the perfect time to buy it if you haven't bought any yet, right here, because there's a report, and I'm not going to show this to you, but there's a report that shows whales. There is one stat I do want to show you as we're talking about the stock market being down today. So sorry if this is, I don't know if that's going to, it's not going to let me, is it? I have this one graphic that I wanted to show you. This is from the Fed. So, okay, look at this. Households and nonprofit organizations directly and indirectly held corporate equities as a percentage of financial assets. And then this one is a percentage of total assets. So you have the blue and the red. Basically, right now, we are at a point in time in which households, regular people, you and me, and nonprofit organizations, they're all grouped together, hold more stocks than ever before at any time. So stock ownership, equities is how they're referred to here. Equities as a percentage of financial assets. The highest percentage of equities ever. Percentage. Remember, This isn't one of those stats that's thrown off by, oh, well, yeah, there's more people now. So no, percentage of assets, more equities now than ever. You tell me what Wall Street will do with that information. You tell me. I know they've set it up the whole time. This is not an accident. So that right there tells you, to me, very, very, very frothy situation in stocks, yeah. And I don't expect it to get better. But look there's so much manipulation in the stock market. It's like, who knows what's going to happen? But with Bitcoin, there's a graphic. It's a whale graphic, which shows you where the big buyers have mostly gotten in and protected support-wise, and it's right at 30,000. So you're at 31,000 here. If you haven't gotten into Bitcoin, if you're dollar cost averaging like me, you don't care. You look at it, you go, hey, doesn't matter. I'm buying every week for the next 10 years, and we'll see where we're at that point. And if I'm wrong and it goes to zero, I'm wrong. I'm not investing enough every week to make me cry about it. But, technically I do own a lot of it. So, yeah, it would suck. But the bottom line is, I think that's the future. And I think one day, at some point in the future, whether it's 5 years from now, 3 years from now, 10 years from now, people are going to be like, oh my gosh, Bitcoin's so obvious. It's $1.2 million per coin, or whatever it is. It's going to be something insane. You're like, everyone's going to be like, how do we miss this? Couple things. Let's go through some of these stories. The COVID recession lasts 2 months, the shortest in U.S. history. This is just total bullshit. So there's no COVID recession. There was a complete and total money grab based on fear. Stocks got killed, were shorted. Tons of money was made by Wall Street. You lost money because you sold, because you believed, as anyone could believe, that a global pandemic that caused governments to tell people to stay at home and not leave their houses. We've all seen, these movies. Contagion. What's the other one? Not Breakout. Outbreak. We've all seen those. We know what it looks like. It's ugly. People are dropping dead everywhere. All the streets are pumping gas, dropping dead. They had us believing that's what we were facing. So it makes sense why people sold stocks and why people thought that real estate was going to recess. There's no such thing as a COVID recession. This is just bullshit. And to me, it's really patronizing, frankly. I mean, they must really think you're stupid. Must really think that I'm stupid, as I'm someone who reads these articles every day. You really think that we can have a recession last 2 months? Just by definition, that means it's not a recession. Second of all, why would you be telling me this? Why are you trying to pump me up? Why are you trying to tell me that it's official? The recession is over. It's over. Your mask, get rid of your mask and go do whatever. Invest your money. Feel free to run rampant on the day the market's down huge. Okay. That kind of tells me that maybe they're trying to put a little hopium into the air. I don't know. I don't like it, though. I don't like it. These stocks are already in a bear market. I'm putting this link in there just so you can see, because some stocks have been getting hit pretty hard. And those particular stocks, it's worth making note of them. They've been hit very, very hard. Very, very hard. Why? Especially like Penn? Like what? That's weird. Carnival, that makes sense. The cruise lines, that makes sense. Pharmaceuticals, why? The airlines, totally makes sense. Some of these are worth looking at. If you own any of them, you may not think you own them. Like, oh, no, I don't own any of those. Check your mutual funds. See if they own them. See if your money managers were doing their damn jobs and kept you away from the danger, or if they just bought everything. And what's the point in paying those fees? This one, what's behind the sell-off and why it may signal a bigger correction. Aha, but this is pro. So you got to pay for this one. This one you got to pay for. The one that talks about what might really be going on. That one costs money. Okie doke. Here's something on the crypto side I wanted to make people aware of, because they do a damn good job of scaring people out of crypto. There is this video that shows in Malaysia they're using a steamroller to destroy these mines. And remember when China banned the miners? Guys, you got to remember, the miners create supply. So if someone does something like this, steamrolls mining equipment or bans miners, that's decreasing the supply available of said product. If the supply goes down, the price should go up. Yet somehow the price goes down. How could that be? This is what I'm telling you. This is what I've been trying to describe. What's happening in the price is happening is controlled, is manipulated. Then they send you the messages to try to give you the reasons so that you'll be okay and understand why the price is going down. Because the price just goes down and there's no reason why. People ask questions. But if they give you an answer like this, or some of the other FUD you've been seeing, then you'll go, oh, that's why the price is down. And you won't think, oh, these guys over here are pushing buttons and manipulating everything. But that's what's really happening. Don't kid yourself. Robinhood warns retail trading is slowing down, especially in cryptocurrencies. Definitely. So here's another thing, particularly with crypto. And you can use this with any asset class, by the way. When it's not hot, when it's not in the news every day, when it's not being pumped up, when it's a little quieter, when interest is waning on something, that's usually the best time to buy it. I mean, let's just look at real estate, for example. When was the last time people were cursing real estate? Okay, the crash. How much is your home up in value if you bought right after the crash? 300%, 400% in every single market in the country? I mean, huge, huge gains. So the time that people always say, the time to buy is when blood's in the streets. There's blood in the crypto streets right now. Okay, let's take a look at mortgage rates. I am going to start quoting mortgage rates, and I've got to figure out some legalities behind it, but I'm going to start posting a video probably every day of like what current mortgage rates are, because people ask me that question all the time, and it's very difficult. It's a very specific thing, and it can be difficult to quote, but I'm going to figure out how to do it because it's clearly what people want, and I'm the type of guy who tries to figure out how to get people what they want. So I think business is really just that simple. Business is as simple as you give people what they want, and they give you money. If you think about it that way, that's as simple as business is. And sometimes people don't even have to give you money. Like, no one gives me any money. I get paid by the banks to help facilitate loans. So that is a real simple way to go about it. So here, let's take a look. We got another beautiful day today. The stock market being down is good for us, because we want bond prices to go higher, right? Which is the trajectory that we're on right now. Bond prices moving higher, which creates lower interest rates. And we had this little snafu here, which we avoided. And this is what, Barry missed this one. He's very, very rarely he misses. These charts are provided by Barry Abib. mbshighway.com is the website. And, they issued a lock alert here. Now, their lock alerts are designed to beat an intraday reprice, whereas I'm not usually trying to do that, although sometimes it's helpful when you have those. We busted back through all these moving averages and then immediately came back up. I mean, immediately it was so hard to get through these. Initially, we were 1, 2, 3, 4 days. Didn't think it would be possible. We jumped and leapfrogged up higher, and then we went back down through all of them, and that was really disheartening. But we've bounced back very nicely here, and you can see this total move. We're pretty much right back up where we were. We need to test this 104, and then the 200-day moving average is right here. Now remember, this 200-day moving average is declining, so it's going to have some momentum. When we get to it, it's probably going to push us down a little bit, but maybe not. If we punch through it, sky's the limit. This is what we're going to all-time lows again for mortgage rates if we get above this. That's where it's headed. So we are on the precipice of that right now. It sounded weird. Sometimes you say words, and if you say them too many times or you say them in a certain way with the wrong pronunciation, they just kind of don't come out right. That sounded weird. But anyhow, mortgage rates look really, really good. Great time. Oh, how could I forget? Here's a huge piece of information. And I don't know if I'm supposed to tell anyone this or not, or if it's been officially released out to the public yet or not, but our bank did receive word late last week. There's an adverse market fee that was being charged by the FHFA on conventional refinance loans. That is being lifted. Pricing will be reflecting that. And if you're doing a conventional refinance, amazing time to relook at interest rates and see what you want to do there. There's some really, really good stuff. If you want to refinance a conventional loan, I'm a VA specialist, which I think is great, especially when you're purchasing a home, to have a specialist. We can do everything. Conventional refinances, amazing opportunity right now for conventional refinances. I mean, just incredible. Not only have we gained, 60 basis points in the last few business days, but you also get that 50 basis points taken off the top because the FHFA. Now you're looking at really, and that's just on conventional refinances. That the adverse market fee was only on refinances. Now it's gone. So it's basically like the equivalent of, let's say, 100 plus basis point move in just a few days. That's huge for conventional refinances. So if you want to do a conventional refi, give me a shout, and I'm happy to help you figure that out. We always work very, very hard to try to help you get the absolute best possible deal on your home loan. If I can't give you the best deal, I won't do it for you. That's simple. I'm not going to tell you to work with me if I can't get you the best deal. I'll tell you to go where you need to go. So give me a call, text, email if you have questions, and remember, read between the lines. Why do they want me to feel like it's like the risk is off? Why do they want me to feel like it's all over? There's nothing to worry about. The COVID recession is done. Why are they telling me those things? How does that make any sense? And is there something I should really be thinking about? So hopefully this helps you look at things a little bit more from your perspective and not from, someone else's perspective they're trying to put on to you. Hopefully it helps. All right, guys, have a great day, and I'll be in touch soon.